Traders, welcome back to our price action trading lesson. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart. We're going to be using price action rules to help us navigate the market and identify high probability setups. So right now the ES is indicating some very structural working lower. You have a downtrend working lower. There is no third swing confirmation. One swing, second swing, no third swing confirmation. But because it's the prevailing structure, I'm thinking more bearish. If we're going to get a break below EMA, it makes sense right now to expect new low to be tested. Market is correcting. We have right now a first entry long below EMA that is going to fail, and we have lower high confirmation setup, or the fact that the downtrend needs to get new extreme. Now, this lower high had terrible signal bar. The secondary bar using potential double bar entry is decent. This is not the strongest lower high, it's a little bit more aggressive. Also, it's not confirming super textbook high probability setup. I took this setup way riskier trade than normally you would like. But because I like testing the new extreme, uptrend breaking new high, push below EMA, it can be considered maybe first decent high probability setup for the day. If you're more advanced, it's okay setup. It worked for a scalp. And market right now is breaking above the EMA. So right now I'm asking myself, hold on, why market didn't fully test the new low? We were close, but not fully new extreme tested, and we're back above EMA. So at this point, I'm gonna pause looking to go short, because the downtrend didn't fully get new low and we're back above the EMA. So there is a chance that market wants to see some bigger two-legged pullback like this. Let's see what's going to happen. I'm not thinking about selling at this point because there's a brand new trend established. The correction is kicking in. We're above EMA. Right now, because we didn't test the new low and correction is stronger, I'm not thinking about selling just yet. There was no trigger, but I don't want to sell just yet. I would need to see some push below EMA as a confirmation. Okay, sellers are back in the market and we're about to test the new low. Okay, as long as I'm above EMA, I'm still leery of the bullish pressure. It's a little bit stronger. Let's see what's going to happen. And the market keeps trending to the upside. So now we have significant bullish imbalance, and I'm definitely now questioning the strength of the sellers in the market. This is not what is supposed to happen. Okay, it can be that there's a little bit tighter alternative, kind of like a spike down, break new low, another spike down. That doesn't happen that often, but can be. And now we have price action working higher, so I'm definitely not thinking about selling. There's too much of a bullish imbalance, and market keeps going higher so strongly that I have to completely adapt. So I'm forgetting about new low for this downtrend, and I'm right now adapting to a brand new market structure. So I can draw a few ways of this short-term uptrend, something like this, or we can also draw some bigger channel. If I'm going to draw it like this seems a little bit too broad. Okay, massive overshoot, a little bit too broad, so this is not a good channel. Maybe the actual move started a little bit later, so I can draw something like this. This channel now looks a little bit better, fits pretty well, so I can play this channel. Let's see what's going to happen. Market keeps going higher, keeps going higher. We have correction working low, so I'm going to redraw the downtrend like this. Okay, let's see what's going to happen. I can move it higher a little bit. I'm not thinking about selling because we traded up. Okay, you're either following this short-term channel, you're expecting new high, or you're waiting for confirmation of this channel. So I'm already reading the candles in front of me, and I'm trying to predict some bullish structure. We definitely have bullish structure. Now the goal is, as a price action trader, just to find the right key entry point. Okay, I'm using the market geometry, locating as many key entry points and confirmations I can. We have a break, push to new extreme for the downtrend. Okay, and we actually have a new high, no break above. Press them to go long, pull back, second entry long. We have a second entry long. Of course, the signal bar is weak, so I don't really want to go long. But massive push above EMA is now confirming, okay, price action is telling me this uptrend is valid. I have three swing confirmation. Okay, push above EMA is telling me buyers are buying at this important key entry point. So I can consider this channel valid. And right now, since I have all the pieces of the puzzle together and everything makes sense, the setup I'm looking for is high-low confirmation setup to confirm, okay, a brand new push phase is about to start. Because that's our goal. If the market is in a bullish trend, we want to identify where the correction phase is going to end and the push phase is going to start. And the push phase always starts at this key entry point. Now it's confirmed. Can I get a high-low? No high-low, and market created a significant push phase working higher. Okay, I'm going to redraw a brand new downtrend. Once again, I'm waiting my turn for the correction. Can I go long? Now we have a new high first entry long, pull back second entry long, another second entry long. I can actually make the channel a little bit tighter. But problem is, this second entry long is inside of the short-term correction, so I cannot go long just yet. There's no way I can draw it tighter with small break new low, maybe like this, but this is super micro. We don't really draw it micro like this. That's way too dangerous because you want to protect yourself against these micro breaks. Can I get high-low confirmation setup? Yes, I have high-low here, but I wanted to see much stronger signal bar. This would be a great high probability setup because there's close outside, attempt to test the new low, failed, but we can see that the signal bar has significant bearish body, so I cannot really go long. If you have nice bullish bar, you can definitely go long on this high low, but you can already tell where you're looking to go long. We have a failed second entry short now, but the body is so far from the EMA, I can't take it. There's a gap between the body and the EMA, that's not good. Market may correct a little bit lower. And now we have the stronger correction. Problem is, I'm going to draw the channel a little bit better so I get confirmation here. Something like this. Problem is, it's way too wedge. I can see that I have significant resistance. One bounce, second bounce, third bounce, and this is way too wedge. That's the reason why we want to skip it, because it's too squeezed, it's too wedge, and this significant resistance is causing some trouble. Why price action is struggling to break it. So for this reason, it's better to right now skip this. I have to redraw a brand new downtrend, and it's way too wedge, so I would need something stronger. Okay, market is correcting. We have a break, push to new low, downtrend played out, and we have break almost above EMA and another high-low confirmation setup. Now downtrend played out. We have now the stronger correction out of the wedge. So if you're gonna picture the wedge like this, you have a breakout. Most breakouts will fail, and this uptrend is new high, so it makes sense that this breakout out of the wedge is gonna fail. It's gonna go higher. You know, this high-low is decent. It would have been better had it been fully above EMA, but decent enough, decent high probability setup. You expect new high, it's a high-low, decent entry. The safer entry is a failed second entry short above EMA. The stronger trap, something like this, pullback going higher. But you can see, this is what you're expecting. You have bullish structure, you have key entry point, and you're just waiting the correction out, and you're waiting for the right opportunity to jump on the board to expect new high. Just using pure price action. Can I get a failed second entry short? Once again, so far from the EMA, I cannot go long here. It's miles away from the EMA with the body. There is not even bearish bar in between. It's too steep. It's part of one move, so I definitely cannot go long here. And now you're below EMA doji, and there was no way for me to get in, so nothing. Uptrend played out with the break, push to new high. So right now I'm going to pause, looking to go long. I'm going to redraw a downtrend working lower. We have a second entry long, but this is what we would call a late second entry long, because there is so much empty room. Let's say you're going to draw a little bit wider channel. There is so much empty room here. It's indicating that the trend is weakening. The trend can roll over, but more importantly, you just had to break a new high here. You just had to break a new high here, literally right here. So after new high, you have to pause, looking to go long. If you're thinking about widening channel or playing some secondary channel like this, you need more confirmation, okay? If you have just breaking new high or new extreme period, you need some continuous rejections. Taking the very first second entry long after new high, it's simply too early. We just did a new high. So any wider channel or secondary channel that you're thinking about and it looks good, you still need to be careful, and you still need to get some high-low confirmation setup to confirm that the trend continuation phase is still there. So this is why we can't go long just yet. We just had to break a new high. Okay, we can see some reaction of this flatter channel. I'm just gonna make it a little bit cleaner here. I'm gonna draw it like this. Okay, the flatter channel looks okay. A lot of confirmations. Market geometry once again fits well. It looks good on 10,000 tick chart. Once again, looks like two legs down, one leg down, second leg down. You have a new low, first entry short. Pullback. Okay, bars are a little bit different now. This was high-low breakout pullback. Now it looks like new low, first entry short. Yeah, there's no failed second entry short. So this is technically failed second entry short. And I took this setup, but I took this setup as a high-low breakout pullback. Why high-low breakout pullback? Because I saw small congestion like this. And I keep reloading my data periodically. So few ticks changed a little bit, but now it is a failed second entry short. And I saw it as a breakout pullback. I went long here. Now you can tell it's a little bit sideways, a little bit stacked. It's not clean, but you know, we are going higher. We need to test new high. We need to make new push phase. Market is bullish. Even this key entry point held. I was playing a little bit different channel. Had I been playing this channel, it's even safer to go long here. But you can tell it's a little bit stacked. I took this setup and I got burned here, unfortunately. But I kind of like this setup. Trading is about taking a chance. I'm going to mark it more aggressive because it's a little bit too stacked. It's not super clean. You can see we're going sideways for quite a bit, but I took a chance here. I got burned here because I expected new high. Downtrend played out 2 legs down. I saw it's a breakout pullback. It's time to go long. Unfortunately, I was just a little bit early. That can happen when market is quite choppy, because now you have new high first entry long, second entry long, and you have high low multiple test, high low multiple test at the bottom of this trend line, and this is now a little bit safer setup to consider. I didn't take it because I didn't enter right after the trade and I was about to take my break, but it's an okay setup to consider. So just a little bit too early. And market is working higher, so this channel is holding well. You can see the market geometry is telling you why prices is bouncing in these places. That's because there's a key entry point in play. You can see this is what a lot of times happen. You can use the channel and find it way too early in the price action move. Right there, market is correct. I'm gonna redraw brand new downtrend, break below EMA, new high first entry long, second entry long. This is a second entry long. Actually, you can also play around with this and find a channel something like this. Okay, when you're watching this live, you have more time to find the best channel and fine tune the channel to fit the best. And this is a decent second entry long. Downtrend played out 2 legs down off the key entry point. Can I get a hello? No. Well, I already broke these highs, so I had to kind of treat it as a first entry long, so I can't really go long now. Hello would be if these highs don't exceed these highs that you're using to count the second entry. Okay, this is the highest high of this pullback, using this to count the second entry long. So you want high low before you're going to reach and break these highs. Once you break them, count resets over, and you have to treat it as a first entry long. Okay, market is correcting something like this, breaking new high. So I'm going to pause, looking to go long. But market is not acting as it's reversing nor correcting. It keeps going higher and it looks quite structured. So I'm thinking, hold on, is the uptrend wider? Yes, it has to be wider. Okay, you can tell the trend up still very structured. After breaking new high, it's not acting as reversal, correction, nothing. You keep creating higher highs, higher lows. So once again, since it looks still structured, I'm going to find a little broader channel, something like this. It fits pretty well. You can see still looks structured. You're getting some confirmations, and you can use higher time frame. It looks good on 10,000 tick chart. So I'm going to right now play the uptrend still in play. So once again, resetting the count at each new high, respecting correction phase, and I want to buy at the bottom where the push phase is going to start. That's how we trade the price action. It's a bit counterintuitive because you think that the market is reversing because you're witnessing the correction working lower, and you think the market is about to reverse, but you simply have to trust price action rules and force yourself to end at the bottom near the key entry point, because this is where the push phase is about to start. Okay, I'm going to redraw a brand new downtrend working lower. There is no trigger for second entry long with a good signal bar, but even with a good trigger and bar, you have to draw short-term downtrend, so I can't really go long here. Break new low, downtrend played out. Signal bar is a little bit too big. Can I get high low? High low below EMA, a little bit squeezed. I think I need something above EMA. You know, it's a little bit too squeezed, a little bit too wedged. Even though it worked, I prefer felt second entry short. And now you have a felt second entry short. And this is a great setup, of course, educational wise, because it's too late. But new low, first entry short, second entry short failure, exactly where the correction phase ends. Break a new low at the key entry point, and this is where all the smart bulls are buying, and a brand new push phase can start. And market is about to close, and key entry point is holding again. So this is the overall structure for today. We trade up higher the entire day. Initially, we had nice channel with the break new high, but you can see market is not acting as a new market cycle is kicking in. In fact, it's a trend continuation. So we can draw secondary channel that is a little bit flatter. It's like a big spike and a channel pattern working higher. So I hope you had a good trade. I'm going to wrap it up. I'm going to talk to you next time. Good luck your trading.